Hello guys, welcome to the Trading Parrot. Yesterday, after the FOMC meeting, we confirmed that the rates were unchanged. As we were expecting, the thing that actually mattered was the speech from Powell, and we got some confirmation that in the upcoming 10 days, starting with the 1st of April, we are starting to see the first steps towards slowing down quantitative tightening. Although I agree these are big news, many people are overestimating and exaggerating the news on Twitter, so I thought I might as well do an in-depth analysis of Bitcoin. We will cover some news, but we will mainly focus on data-driven decisions. What's going on literally with everything. This will include potential upside, downside, socials, news, spread charts, liquidation levels, order book data, level of open interest versus spot of this move, what other TA analysts are saying, and based on all of that, I'll give you an update on what is my current stance, whether I'm planning to re-enter the market after having taken profits, what could be the potential re-entry, what is it that I'm waiting for, and all of that. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. It will be great if this video managed to get to 1,000 likes. Give me your vote of hope and give that like right now before you forget. I will really appreciate it. And a reminder that today at 4 p.m. we're going to have the first private TA session with all my elite members on my Patreon. You are still in time to join, to vote for your first 5 coins that you want TA to be done. We have 1 hour with a small group, maybe around 15 people by now. And we'll do TA in priority order based on your votes, and we'll answer your questions. You can join live or watch the recording after if you have issues with the timing. Let's go into the content. First of all, the socials. Let's see where we are with these recent moves. We are at 25, which is higher than 24 in mid-February. Remember that with this move to 37, we qualify that as a breakout on the socials because it seems to be breaking out from this bull flag, attracting once again retail back into the system. But now with this low, it's slightly too low, and I'm surprised that still with the price action, we are not seeing yet another 30s or even 40s. Just looking at socials, that divergence between price and retail at the moment means that they can still trap more retail if they push the price higher. Another way of interpreting that is market maker is going to have to push price higher if they want to bring further retail into any potential hypothetical trap to the downside. That is just one way of seeing things. Of course, there's many more, but I have to go through so many tabs that I'm gonna just leave it there. Let's see, just scanning with the eyes through hot stories on news and seeing what really stands out. Definitely the crypto industry has turned into a global meme coin casino. It's not great. We got in here, US recession will be a big catalyst for Bitcoin coming from BlackRock. Bitcoin will be a big winner from a potential US recession as it's built to thrive in a high fiscal spending, low interest rate environment, says a BlackRock executive. I never, ever, not even coming from BlackRock, take seriously anything, any statement from executives, from funds or financial institutions. They're usually sharing these ideas to counter trade it. Think about it. They really need to profit. If they have a great idea of something that is going to do really well, they usually do it in the opposite way. First, they spread fear, then they buy low, and then they work on this sort of articles to get people trapped. That's how they manage to find exit liquidity. If they do it the opposite way, do you think BlackRock will have got here in the first place? Impossible. They did that by doing always the counter trade and manipulation via media, by owning large chunks of media and all of that. And the second news that caught my attention, because I have always an eye on security and you should as well, what's the point of cashing out and learning all the scrap of trading when at the end of the day you deposit it on a cold storage wallet and all of that, but still you install a crappy copy of TradingView that runs locally and that comes with a Trojan that when you are away from your computer does thing to your clipboard or whatever, and you end up sending your crypto to someone else. I will expect that none of you sophisticated traders will do such a thing of looking for a version premium of TradingView that you download, with a link from Reddit to save yourself $100 and then end up losing your millions of dollars that you have so far accumulated with hard work in the trading world. That makes no sense. But just in case if one of you encounters a page like this inviting you to download, install something natively on Windows, macOS, or even Android phones, just know there is nothing free in life. If it's free, you are the product and they're about to steal all your money. Very simple rule. I really like this account on Twitter. I'm just gonna show you where to find it. It's called Roman_trading, and I like seeing his analysis. Sometimes I find it over bearish, sometimes he's right, sometimes he's wrong, just like myself. But it's interesting to see that he sees on the daily this potential incoming bearish cross on the stochastic RSI that I haven't seen. And he really sees a bit more downside from here. And here's the reason why you're subscribed to this channel, because I never ever swallow these tips. If you find a crypto Twitter account that types with capitals, and I will give you the full list, but I really don't want to go against anybody, just spot them. Everything with capitals you should not follow. For example, this one says breaking, Fed says QT ends on April 1st. That is a huge overstatement. These sort of tweets are incredibly viral. They go immediately into hundreds of thousands of views and tens of thousands of likes. Some of them go to millions. It is incredibly dangerous how they manipulate the mind of people. QT doesn't end on April 1st. Let's start with that. They have reduced a portion. I will say 1/3 has been reduced, which is significant, but that doesn't count as QT ends. There's even some accounts stating that yesterday QT ended, which is just like, what? These people really don't care about informing anybody. They use misinformation to become popular. You wouldn't imagine how many times I thought I am wasting time by targeting my content to intelligent people. We are in a world where intelligent people are diminishing in numbers. There are statistics that are saying that in the past 10 years, in average, we have become more stupid thanks to social media and many other factors. Politics and, don't get me started, but everything is proving that point. The next one is Dan Crypto Trades. Please follow that account as well. That is great account. We are not friends. I don't talk with any of these people. I just follow them just like you follow me or other people. BTC has seen a 1.5 billion open interest increase since yesterday. That's a big number, and 1/3 of that increased on Ethereum. Most of this was already put on due to the move into FOMC and afterwards. Some of it has already closed out as well. Don't think the expectations for Trump's recording today are very high, which might help mute volatility a bit. Regardless, it will cause some weird price action as it always does. So keep that in mind when trading. So we'll keep an eye on open interest. I have a chart of open interest aggregated, which we're gonna cover. And I also have one on crypto Quant that compares the price move versus the open interest move. And there is a divergence there that is not really great news. I wanted to cover this chart that shows the Federal Reserve balance sheet, and I want to mention that around here, November 25th in 2024, we started talking about a breakout. We've been chasing this breakout pretty much since November. It's going to be almost 120 days that we spot the breakout. After that, we say, well, we have a double bottom, and we pursue with this idea that eventually we're going to build a channel to upside. Channel to upside means Federal Reserve adding to their balance sheet and therefore points towards quantitative easing. We are not yet there, but the further we go in this direction, the higher the chances that that's going to be the case. And one way of seeing this is what the Federal Reserve is actually doing, or at least is what they publish, assuming that they're being honest in what they publish. But they list this on TradingView and it's showing higher highs and higher lows. And that's something that we have covered in the channel way before yesterday. As I say, 120 days ago, we are talking about the shift and having come from this downtrend, which is way smaller than this. If we actually pursue in this direction, it's going to be a great call, in my opinion. Even if Bitcoin put a high and now is coming back down, that divergence could be really sweet in the long run. Remember that in this channel we cover swing trades, we cover sometimes some scalps when I slow down and I go to the 15-minute chart, we cover the weekly and the monthly to give us an idea on whether it's still worth holding Bitcoin for the cycle and all of that. Sometimes I make the mistake and I say this is bearish and I forget to say that is bearish for my swing trade, but not necessarily in the big picture for the whole year. There can still be a new all-time high and I'm bearish on my swing trade. I'm taking profits because I find more efficient to re-enter on the next low, stuff like that. Sorry if that becomes confusing sometimes. I know it does because people come back to the video saying, oh, you were bearish 3 months ago. I came back, price went up. Well, bearish in what context? M2 puts a high and now it's just hovering there at the highs. Let's see if we are going to get a comeback into the neckline to retest the breakout, or if we are just going to rally like previous times where we just slow down, then more liquidity, slow down, more liquidity, and that sort of movement really helps in a delayed way with Bitcoin catching up with a delay of 1 to 3 months, I will say. Speaking of open interest, what's going on in here? The last time I covered this chart that now I'm just covering once a week, so I hope that you're watching all the videos and you have the time to follow up with that. But what I said was before 15th of March, I think I did the last update and I say this is a double bottom in here. So far, we have defended the 50 Fibonacci retracement, put a new double top, a smaller one, and broke out to 25.8 billion. So far, the open interest is kind of shifting this momentum down into forming some sort of bottom information around here. Let's see if we are going to be able to defend that once the price comes back and tests the previous low range that we were trading this from November and we lost end of February. That is located at around 92k. March is currently in the positive, just 158%, contrarian to the previous performance, saying that a red February comes with the advantage of a red March. There's still 10 days to go, and I also mentioned that previous readings of past performance in late 2024, they all were a mixed bag. Half of them play out, half of them broke the rule. For example, September was mostly red in the past and we have a 7% up in September. And I cannot even remember, but every single month there was some forecast based on past performance that was half of the time disappointing, half of the time being accurate. So the way you can take away this is don't assume that all the other influencers are telling you March must be red. That is the past performance. So come on, respect it. No way. Just be open to the possibilities of a March in green. Hash ribbons, important to follow up in here. Remember that on Sunday we have another capitulation signal. That means that the hash rate has come down, and this time out of the 3 capitulation signals that we have in a row since early February, this last one is the one that has opened up the most the mouth of the MAs on the hash rate. That means that the actual reading of the hash rate has come significantly lower than the 2 previous signals where we had just a mild move down of the hash rate. Luckily for us, the price is moving up above the moving averages that are built into the hash ribbons indicator, indicating that we could potentially get the bullish cross on the price. But the bullish cross on the hash ribbons, which is a requirement to print the final buy signal, that one that has a huge performance in the past from this indicator, really popular indicator and really accurate. What we need is in order of priority. First, we need the hash rate moving averages to produce a bull cross. So far, the mouth is so open that it's gonna take a few days to get that. I'm having the feeling that we're gonna get first the bull cross on the price, but that wouldn't count because we just had the capitulation. The code of the indicator, which I already read, says to print a buy, you have to have a bull cross on the price, and you have to have recently a recovery signal on the hash rate, which translates to a bull cross on the hash rate. And you can see that is not there. So we might get the bull cross on the price, and unfortunately the indicator might not print buy. So watch out for that. Read the code yourself, do your own research. Top and bottom weekly. I have covered this in a recent video, but I'm coming back to this because I'm seeing that regardless of how we place the trend line in here, we are breaking down. If I connect this white line with this this bottom and that bottom, we are breaking down. If I use the all-time history support on the lower end, the yellow one, we are also below it. So we really at the very least need this top bottom indicator to reclaim the yellow line in here if we want to have another rally into the top. Remember, historically Bitcoin bottoms once it touches or is very close to the yellow line, and it tops on this top end in here. This is an indicator I built, and I have the feeling I covered it on Sunday Alpha in that video. Remember that all these videos, including the one that you're watching, come with timestamps. Use the timestamps to go to what you care about. In that video, I also left instructions on where to find the indicator for free, so you can also follow up with it. All right, let's go to the 4 hour. Any bearish things that I say in the 4 hour now are just an appreciation on the shorter time frames, and it doesn't necessarily mean I'm bearish for the long term on Bitcoin for the rest of 2025 or anything else. So let's look at the RSI. You can see that we have these highs in here at 80. That was 17th of January. Then we have a high on 2nd of March. They more or less coincide with the highs here when we were doing the all-time high. Then this high in here was the pump Trump where he tweeted on Sunday. And now we are reaching that 71. At the moment we are at 69, but possibly on intra candle when we went to 87,440, we were slightly above that. So that has a high likelihood now to form a channel to the downside. But watch out with what I'm gonna say, because that is the important bit. In here, the highest RSI was 80, but if you check on the price, at that point we were at 105.8. After that, we have some rejection that put the price at 99.5. So from 105, that was a retracement of almost 6%, and then we still put a high at 109.4. That means that the all-time high on the 4 hour will have already started the channel to the downside and already have done 2 lower highs on the RSI, and at that point you get the all-time high. Now, does that mean that that must happen the same way now to find that actual local top on the price? Nope. Look at this. On the Trump pump, we get an impulsive move. There are no retracements. There are no swing lows from 78 all the way to 94.8. And thanks to that, the peak of the price coincides with the peak of the RSI and therefore the momentum. That is at 72. As soon as you reach that resistance, they throw the towel, the whale closes its positions, takes profit. We take profit too there. And then we see a retracement to 38, which is really painful for most of the rest of the people that are not watching the channel. That was a retracement of 14% at a moment that everybody was saying the crypto reserve is confirmed on a Sunday. Let's just buy the heck out of that. And it's been really bad because people were buying at this point on a Sunday with all their expectations and hope of a recovery. And look at that, 14, then a drawdown of 20%, and we still don't recover to those prices that people were seeing on Sunday. Going back on topic, you can see that here at 70, we are once again touching that global resistance that has a high likelihood to build that channel down. And what could happen is option 1, we do as the Trump pump and we just correct from there. Not necessarily I'm calling for the bottom, I'm just saying correct from there. Maybe we stop there, maybe we stop halfway, I don't know. Option 2 is that we stop right where we are and we start putting lower highs like in the all-time high. If we do such a thing, I could be right that 71 or 70 is the top of the 4-hour RSI, but while being still right that that channel is being formed, on each of these peaks, 65 or the peak of 59, you can still manage to get even to 89K. And that's assuming that I'm right on this red line. If I'm wrong on that red line and we end up pinching the global resistance against that likelihood that at the moment is very low that we do that, if from here we went now, let's say to 73, just 73, something conservative, let's say we break the resistance, that puts the price straight away into 90K. So in order to achieve that, we really need to go against the flow and do something that we didn't even do in the all-time high today, okay? So that is how low likely it is that we do that. Can we still get to 90 doing something else? Sure. We can correct even to 42, have a fake breakdown, and from there go to the red line, and thanks to all that move down, thanks to all that reset, then a move to 59 can push the price beyond 90K. So RSI is a lot more complex than people and most other technicians can see. And I'm surprised how simplified they presented. Yesterday I was watching a video that had 20,000 views in a matter of a couple of hours, and it was saying you should definitely consider using RSI. And I watched the whole video because I'm a fan of RSI, and all I took away was that 30 is oversold and 70 was overbought, and that there are some complex things called divergences. Anyways, as I said, if I focus my channel on stupid people, I will probably 10x the size of my channel overnight. But I really enjoy the idea of thinking that sophisticated traders are appreciating expanding the limits in Spanish, the limits of knowledge, wisdom, sharing experiences that are beyond just 30 and 70 on RSI, which is really underwhelming. All right, daily time frame. You can see that yesterday we managed to put a candle close above the 200 moving average. That's the daily, and many people are looking for that. Today, the job of the price action on the daily is to hold the 200 moving average. Not necessarily there is any pressure now to actually break out from the falling wedge. That is not needed. If we close above 85K, I will say that is really bullish for the daily time frame. You can see that we were very close already to 88K. That is the second level of take profit, the one I left intentionally on the table. And second, we have this trading range that we lost since late February until now, and if we were able to reclaim it while at the same time breaking out from the falling wedge, we are talking about 97K being probably one of the next targets. Why is that? Because in trading ranges, when you define a volume profile, if you break down and you reclaim, the theory says something very simple. Reclaiming means going back to the top of the range, currently located at 103.2, but a conservative target is to go and at least give a kiss to the point of control, which is usually around the middle of the range, formed by the highest volume of the volume profile. At the moment, that is 97, give or take. We spend so much time there. It's the most traded area in volume. So if price turns into bullish on the daily, going to 97K, will be great. Watch out though, in the middle there are two levels that are gonna be tough battles, and this is assuming that we manage to reclaim the previous range, assuming that we can close above 86 and break out from the falling wedge, which is gonna be tough, but there is a chance that we could do that too. 90.5 resistance. You can see how many wicks there are all the way in here, and it was the order block that sent the price 15% down. Then 94 in here to 95, the Trump pump, that is also heavy resistance. And if we can break all those levels, then we can talk about the point of control. Let's see the RSI on the daily. What have we achieved? Well, we achieved something big. We broke out the global resistance on the daily. What are we doing today? We are retesting. We are right there at the 47 that we were talking. Price of Bitcoin as we speak is 85.3. And I will love the RSI to close right here at 47 at the end of today to have the highest chances that this is not just it, that we are not just gonna fake out and come back to the next support at 39. By the way, losing 47 has high likelihood to go to 40. That is the next support. So let's put 40 in here. Because if you do believe, and this is on you, if you do believe on the rally and you think that this channel is the short-term next thing to do, and you haven't entered, or like me, that I close my profits around here, then 40 could be a great idea. So let's say we enter at 40. That means that we need to wait for 80K. So we need to come back below the 200 and find a low at around 80k. If you believe that the breakout is gonna confirm at 47, that could also be the case because the price could pinch below, and as long as on the daily we go back above support, that can just be a bullish liquidity hunt. Alright, let's cover the weekly and let's cover the bull market support band. You can see that we are below the bull market support band, and although many people are gonna think, well, we are turning it now into resistance, I'm sure that some people are going to remember that in 2024 we were in a similar situation. We lost it, we created the bottom of the megaphone pattern, we follow up with this trend line, and then we face it as resistance on the first week. Second week we were above. Third week we put this candle that retest the bull market support band, but on the fourth week we were back below, and then we have the most painful drawdown from the top all the way to a new low. So how would that look like if we were to do something similar? Well, pretty much we will reclaim slightly above it, get into here, the bull market support band will evolve something like this, and then we will have a crash from around, let's say 97, which is the point of control, and then still go to 75. If we repeat this move in here, I'm saying, we don't have to, but just to have it in mind. What's currently happening is that on the weekly we are kind of defining a trading range that is expanded. We started defining a trading range between 93.8 and 104.5, but that was very narrow. After that we created a double M, and the double M technical target ended up playing out, putting a low at around the 80s. So far we held that support, and we have had two candles reclaiming the 80 as support. Again, if we are trading a range and we reclaim now a support and we define all of this as our new range, this is at least saying that we should rally into the resistance. But the actual target is to go back into the 104 if we define this as our new trading range. Elements supporting that at the moment are the stochastic weekly RSI bullish cross that we confirmed last Sunday, and the reclaim potential. This is a candle in progress on the RSI weekly. You can see that is sticking the head above the new resistance. That resistance could play out in a similar way as July 2024, where we lost support. You can see we lost the first line of support in here. We came back to reclaim it. We spent 1 week above it and then back below. So that will look like reclaiming this week, then another week above, and then putting a new low around 44. If we repeat the same performance in the same way, which never happens, but you know, it could rhyme, so it's better to have an idea. Then on the second attempt, we reclaim the support. So if we were to do something like that, we have also this line for the breakout. The line in here was placed like this. So let's say we do something like this, and then we put a double bottom, and then we break out from here, and we have some sort of rally like that. Just speculation, not a forecast. Don't marry any specific indicator by itself. CPR monthly in March is at the moment showing pivots between 86,380 and 90.777. That should act as heavy resistance. If things flip bullish enough, we can reclaim the pivots, and then we can rally into 98,780 according to the CPR model. This month we haven't touched the first support at 74. We got really close, but we managed to somehow find support before that. The previous month we touched the first and the second support, so CPR model at the moment as a leading indicator is giving us the forecast that we will still in March touch the first support. Not always the CPR gets things correctly, but it's worth mentioning for your awareness. CME gaps, now they're all gone, including the one from the previous week. You can see that I accommodate this, and no matter how I accommodate it, well, it's still all gone. If I place it like against the last week there, it's gone. If I place it in a consistent way with what we see from CME Premium, remember prices on the lower end are from Binance, on the top end are from CME. So we don't have any further incentive to hit any CME gap at the top. We also took the 77, and currently there is a CME gap at 54, which I'm pretty sure we're gonna feel it in the bear market, and there is a CME gap at 20, but so there is one, I think, at 9K if I remember right. So there are just one or two that you leave behind sometimes and you never feel. But among all the hundreds of CME gaps, you can tell that there are 3 that we haven't taken, and I'm pretty sure that the 54 is gonna be gone by the bear market. So maybe the 20 and the 9 are the only ones that we can track in the future as virgin CPRs, virgin CME gaps. Monthly, how does it look like? Well, to me this looks bearish on the monthly, and I always give my first impression regardless of my own bias. There is a support, it got broken, we are testing it as resistance, that is 93,100 on the monthly, and we have an indecision candle in here. So what comes next? Well, we have a chance that we could use this candle in here to say, well, maybe the next month we act like we did in September 2023, where after a sell-off with a new low, we put a candle that is not technically fully indecision because the body is a little bit too large, but the technicals, the structure is a bit similar. So maybe in April we get a candle like this thanks to the liquidity coming in, that progress towards the quantitative easing, maybe all of that together. And although I say this is a bearish candle, is engulfing, there's a shooting star there, but none of those bearish candles that we can see in the breakdown have higher volume than the one that took us in here. And that is by itself bullish. Of course, there's still 10 more days for March to do anything. By the end of March, we are going to do another analysis, of course. I wanted to give you an update on leverage squeeze as well. You can see that we have a long signal around the lows, which I overlap with the rest of the reasons I decided to enter at 77.5. This indicator is included in the VIP subscription on my website. You can have access to it if you really want to automate things and get alerts, but I cover it very frequently. Yesterday I did another video mentioning that we have an accumulation of red short signals around here that started from 85 and so far have continued giving the signal. Now we stop in this current candle, we are no longer getting the signal. So let's see past performance. This one in here was also too early, the red, that's why I like the yellow one. These red ones were spot on, those were spot on. These ones were not great. Definitely you get liquidated if you start shorting from here, even if you average down. But somehow the average between the two LS2s there will have been great, assuming that you don't go too high in leverage. In here, the red ones were not great. In here, the red ones, not necessarily that good. So the red ones are for awareness. Sometimes they play out, sometimes the price continues going higher. To be fully honest, the blue ones, the buy signals during the bull market are the ones that I really like using. The red ones, sometimes if they overlap with other bearish things like I did yesterday, I decide to take some profits. So all this move up, what has it done to the monthly support on the RSI? It has gone slightly higher away from that support, so that is great. And yeah, on Bitcoin, you can see that the open interest has moved percentage-wise more than the price. And this is a new way of seeing things that I borrow from Martin. You can find him on Twitter. He works heavily with Quant, has so many dashboards and data that I'm addicted to all of these kind of things. I really like seeing when the open interest, for example, there is greater than what the price did, and you find some local tops, not all the time. We started the pump with the price moving first and the open interest after. So one way of using this is saying, if that is the case, I remain in my position, so there's still some upside, like you can see in this area in here. Then the price continues up. Eventually, the open interest overtaking the performance of the actual price puts a local top, and then you see a big retracement. It won't always play out. Again, seeing these signs together with other signs is really what I care. Ethereum is in a similar situation. You can pause the video and have another look. Good news, because the long-term holders, with the recent retracement of the price into 81, they decided to increase their positions. The ones that are not believing in the move up currently are the short-term holders, which have decided to sell as the price went into 85. And that is a bullish sign for this move. The open interest implies that in the short term, there can be a pullback because people that use open interest to trade are profit takers. They're very short-lived. They're just looking for a target, and once they hit that take profit, they close and they create cascades down until the open interest clears. So you got these two things. What do you make out of this? Well, the long-term holders buying is a long-term signal. So there can be further downside because the open interest crashes and pullbacks. But as long as we continue seeing long-term holders accumulating and even diverting with the price going down, that is a good thing. And let me give you a little bit more insights on long-term holders versus short-term holders. This is going to be incredible alpha, I promise you. This one is from Bin Dang. You can also find his dashboard. He's got 3 dashboards on Quant. I'm not sure if he's got a Twitter, unfortunately, by now. But this dashboard is beautiful. It shows the realized supply percent in the last 30 days change for long-term holders and short-term holders. What we're seeing now is the long-term holders right now. You can see that they were buying like crazy before the breakout of the megaphone pattern. This peak in green from the lows in here shows a full shift. So pretty much they were selling the rip up until 73.5. And from that day, as the price started coming down, you can see how they aggressively accumulate all the flag. Eventually, they reach the 0 line. And around August in 2024, once we have already built our position, they went crazy. Buying. And at the price of around 67K, they start selling the rip. They stop selling at 73.5, and as soon as there is the first dip at around 93K from having hit 105, they start the accumulation again. That accumulation hasn't stopped. Now we are in the 0 line. If we get into the green line, it means that they are accumulating at the fastest pace that they usually do. Green is fastest pace accumulation from long-term holders. If we see that, that is a strong indication that we should be doing the same. Slap yourself 3 times in the mirror if you see green long-term holders doing something and you're actually selling. No, I sold a swing trade. I'm looking for a re-entry. The holding is a different strategy. So I'm going to show you now what retail is doing, okay? See this, before the breakout, before the bull flag breaks out, what are the short-term holders doing? They're selling, and they are selling at the fastest pace possible. Why? Because they don't like profits. They like to live in fear. They like to read the news, watch big, massive YouTube channels selling you crap and crazy, stupid ideas in Ari size 30s, 70s. They do TA with what they learn from TikTok, and they sell right there. Here are all of them selling. What happens after? The price goes higher, and then they think, oh, wait a minute, was this the actual breakout? No one told me. Okay, then they go to YouTube, they watch more YouTube channels, and they think, oh, this thing is gonna go to $2 million, and they buy all the way up. Buy. At the time we are at 73.5 is the moment where they are buying the most. Poor people, because right after that the price retraces and you can see that they are busy right now selling. Now I'm going to show you the overlap, and you can see here beautifully express the transition of cash from retail into long-term holders that know what they do. And here we are at the point of inflection today where they are selling at the fastest pace in the past 30 days and long-term holders are buying that. Exchange of hands, and we'll see who was the right one next time. Take a screenshot of this. Homework, find areas where the long-term holders got it absolutely wrong. You will find, but not as frequent. All right, so BTC ETFs have now had a strike of a few days in the positive. That positive is not as intense as the selling, but is helping to create a shallow kind of base in here. The same base that we were having in January, and then after the all-time high, and then back around here, we are kind of at the same area. Hopefully we defend that area and we go for a new higher high. We're back into neutral on the fear and greed index after multiple days in fear and a few of them in extreme fear. So I hope your cheeks are all red of looking for entries if we start entering in the next upcoming weeks into greed or extreme greed. You know what to do as well. Cerberus is starting to point up and getting very close to print a buy signal. Buy signals, guys, means a confirmation of the warning signal, and sometimes it doesn't necessarily mean that is the point to buy. Sometimes it is the confirmation, but the signal I use is the warning. The warning tells me look for longs. The buy says, well, that could be the beginning of a new range, or even take profits. Liquidation levels, you can see that we have taken all the short-term liquidity. If we go up, you can see that everything is in the blue. I think there's still some decent liquidity to be taken, but things don't get really interesting unless we go beyond 100K. You can see that the 100K is a lot more significant than what we just took at 85, but still there is a bit of a vacuum in here. It's really boring, this part. And really in the close proximity, this 85 was the big star of the week. We see the same in this area. In the long-term liquidity pools, there is a vacuum that is around 10K to just get started back up again in blue and green. Green starts at 100K. There is a huge reward to go to 125, but how do we get there? Because usually what we want to see is liquidity all the way up. That liquidity acts like oil when you're cooking. You cannot really move fast if you don't get the slippery surface that the liquidity pools are giving you. On the lower end though, if we move down 8.5K, we have immediately green. So we're kind of in the middle of nowhere's land when it comes to the larger liquidity pools at the moment. We have taken a fair amount of lower end. We took 1 and 2. We still have 3 that has increased significantly. Let me remove the top ones that are so big that you cannot see really 3. After I remove the top, you can see that we have 3 in there, and we can do a relative comparison against the top, excluding the red, and you can see that motivation of going down to 3, that is a dump now of 16K. If we go up 16K, we only hit green. So compare these clouds in there versus those clouds on the right hand side. And if we do just an isolated analysis just on this picture, my bet will be we're going to 3. Now, of course, there's lots of other factors. In the last 2 weeks, you can see that we took that liquidity that was in there. There is a leftover a little bit slightly below 88K. Last 30 days, there is a flat area in here that goes from 83 to 79, not much liquidity above 83.6, and then we have this cloud in here that we could say the motivation to stay around here and to still hit the 89. After that, there is low liquidity, low, and it starts increasing around the 93, and it really peaks at 97. That 97 is the point of control. By the time we are at 97, we already reclaim the previous range, and that will have already been extremely bullish. We are just getting started. We are getting that early breakout signal on the daily. Today we need to see if we are going to confirm it or fake out and go back to RSI 40, as we say, on the daily and hit the 80s. If we hit 80s, we take all this liquidity and we just hit support on the daily. We still have chances of carrying on higher. Let's see how the order book is looking in here, and I'm seeing a few signals that I really don't like seeing. Particularly, I don't like seeing a reading of almost in the 40s. This is 50.49 we can see of longs versus shorts at a peak of a price. Let me focus on just these two and expand the chart, and I'm gonna put vertical lines on every single time that we hit around 50s. This was 50 and this was below 50. This was 45 and in here. So those are peaks. You see, peak, they're all peaks. And let's look for an uptrend. So let's be fair, because for example, this is 46 and this is another peak and the price didn't stop there. So that was when we were putting the all-time high. So yes, longs can retrace a lot more and the price can carry on higher, but it also all depends on the sentiment and the current structure of the price. That's why absolute numbers won't tell you much. But what I care is when there is a big retracement of longs versus shorts with the price moving higher, that divergence implies that they are throwing the towel around those prices. And that's one of the main points I decided to take out my cash from there and enter hopefully lower. The bid versus ask continues to be very flat. There is at the moment an ongoing battle on deciding direction. Remember that this can turn into support in here, in this area, and it can carry on higher. It will be really interesting if we do that, if we see an increase significant and very sharp of longs coming back, because these indicators are showing this by the time I'm recording the video. By the time the video goes out, this might spike in a pronounced way like in here, and eventually it creates a local bottom and then it goes for 90. If you want to get access to high block capital and have this on your monitor, you can both copy this dashboard, which I have it in my links and on tradingparrot.com/charts. And in the description, you can also find a decent discount to get access to high block capital. When it comes to liquidation levels, we have a delta now of 416K, putting the longs at higher risk. That's the highest we have had maybe in a week. We've been really flat. Let's see what's going on fire charts. Let's see where are they placing their price suppression orders. At the moment, they are placed at 89.8. But remember that price moves up and they move this thing. So again, this is information for you. If you see someone on Twitter publishing 90K, has almost 100 million in ask, you can reply to them, yes. And so there was 90 million at, or 110 million at 84, and now we are at 87. So what? On Trading Light, we see the same thing, the orders moving up, but now there's something interesting, which is that order at the top at 95 has been pulled out. The order at 88, 100 pulled out, and when the price came very close to 88, they put it back. So let's see how that happened in the 15-minute chart. You can see as the price was coming up, they were increasing. Everybody wanted to short 88, but they couldn't. Some of them were trying to chase in here. Some of them follow the price, but the price just crashed out. So there was a big appetite on shorting 88. Here is the liquidation with the big red candle there where I took profits. I think I took at 85,700. So maybe I did prior to that, but the liquidation happened after. There was a larger liquidation at 86.4. Interesting. So where are we with the net longs shorts on Trading Light? Let's go back to the 4-hour. So something happened yesterday that I made you aware and it didn't end up playing out, so I'm gonna show it in here. You can see that at 5,000 we were having all the peaks, and yesterday with the announcements of April from the Fed regarding the QE news, the longs went to 10,000, so they doubled from the peaks of 5,000, now reading 10,000. And in this channel, that is at the top of this channel. So again, another resistance. Let's see if the longs can survive this and break out to new ranges that we were only seeing in previous areas where we were hitting 30,000 in longs. So now at 11,000, 10,000, that's kind of the top of the range since mid-January and beyond that top of the range. So either we get that full shift into risk on and we start rallying and we defend the breakout on the daily time frame, or really what we see in here is the open interest pulling out, rag pulling, and then we see a huge retracement towards our areas of value that tend to be at the bottom of channels. Last areas of value was 22nd of December, this low in here that bounced back up. So even in the downtrend, the areas of value have been the best times to add. For example, this one at 79, that peak at 94, and we haven't had an area of value since then. Fair value gaps. What's going on at the moment? Well, we left half of the 88 final fair value gap before we have to jump all the way into 95K. So that's still on the table. There might be a last week that takes it straight away before the leverage squeeze signals play out, possibly. I can see that the 85.4 that was this morning, that one is gone now. So we we had this morning all the way paved with fair value gaps up until 82,500, not as far as 80, which could be the support of the 4-hour time frame, 1-day time frame RSI. But with fair value gaps, we can go all this way down. And again, I insist, we have vacuum in here, vacuum in there. So the question now is going to be, which vacuum are we going to cross? Those are black holes of fair value gaps. And you can see general markets, how they closed yesterday. So this was not just isolated to crypto. The week, at least the week is in the green. The month is still well in the red for most of the altcoins. Bitcoin dominance remains at resistance levels of the RSI weekly, still at the top of the ascending wedge in a bearish formation. All the ratio charts are at resistance. Watch out for this. If you want to learn about ratio charts, go and watch my video 13 days ago. We are not ready. Spread charts, important update. This update today is just to tell you that we still see on the spread charts that 4 of them are saying we are not ready. What I mean by it, we are not ready, is that we are still below resistance and on a channel down. When I say we are ready, is I'm going to say we have a breakout. For example, in 16th of September, we have a breakout. And then we have one maybe the week after on the other spread chart, and that gave us huge confidence of this move up. We started building our position since 49K, ignoring this from other factors, but the ratios are the last nail in the coffin for the shorts. If we had a breakout confirmed on 4 of them, that is too strong of a signal, but so far we don't have it. Neither on DXY, still below resistance. VIX, far from that resistance. So best case scenario, this guy goes into resistance and could see a rejection. Federal Reserve, look where we are. We are bouncing from support, but far away from that resistance. To see anything that looks like this, it's still too far. Look, we are like here in terms of breakout against global resistance. And on the Nasdaq, we're getting close to that resistance, but we are halfway in a channel. I'm not saying we cannot break out from halfway, but the best breakouts that you see on Nasdaq are usually from support, and that support is still a bit lower. If anything changes on the spread charts, you know where you're going to find that. You're going to find it in this channel. If you don't have time to watch all the videos, then my Patreon is the answer to that. That's where I'm going to give you big important updates. Dollar has completed the cap and handle with a potential breakout to higher prices. VIX is bouncing from entering or re-entering the previous range, and my fear is that bouncing from here is an indication of further expansion of the volatility on S&P 500. An expansion comes with a move down of the price. RSI shows still this healthy for potential upside. That is what I don't like. I am hoping that monetary policies are going to come in hand to slow down any of these effects, and I think that is what they're probably thinking, right? Their analysts, if they are worth the salary they are paying, they should be saying, hey, we should introduce some quantitative easing in here. This thing is kind of ready for a shoot to the moon, and that is a market crash. And Nasdaq is pending again from a thread in here before having a deeper correction in the territory of bear market. If we bounce from here, we dodge the bullet, but you see here on the weekly that we have lost support, and same it goes for S&P. Tesla is losing my area of value, probably thanks to all the things that are going on from people that are hating Elon Musk. Tough times for Tesla. I think it's going to recover at some point. Nvidia is following my steps. If we get beyond 3 to invalidate the bearish scenario, we need to go actually beyond 1, I will say, to start breaking the bearish structure. We are currently way beyond the change of structure that already happened with 2. So this is just the bounce before a flash into 4. At least that is what the monthly time frame is calling out for, with a correction at least into $70, which I think it will be really sweet if we can catch. Guys, if you want to trade with an excellent exchange, consider using the links in the description. I have one for OKX. This one is one of my favorite exchanges. I also have links for Binance. The one for OKX is currently offering $60,000 in exclusive rewards and lowering the fees to the minimum. All you have to do is open your account using the link down below. I'm also running this trading competition on Bluffin exchange. This is a non-KYC exchange. There's still 6 days to join the competition. If you're looking for an alternative non-KYC exchange to Bluffin, you can use BitUnix. The link is also in the description. The advantage of this one is that the bonuses that you're gonna get with that link apply no matter what's the size of the deposit. Even with $100 deposits, you still get 10% bonus. Thanks so much for watching, and all elite members, I'll see you later at 4 p.m. UK time. I'm looking forward to it. Hit the like, write down a comment down below, and I'll see you on the next one. Bye bye.